What I think is very interesting, if we look at this graph here, Jan 2021 to Jan 2022, we've seen essentially 20% or north growth of every segment of the market. Both condos and freeholds are selling over asking substantially more than what they have in previous years. Like, it's not even close. We're seeing what we would typically see in like an average kind of spring market happening in January, which is very unusual. But if you actually look at the greater scope of average price points for other cities, I'm not saying Toronto's cheap. Toronto's not cheap. But I do think that there are certain segments of the market that are undervalued. If we look at kind of like, are condo prices poised for an increase? Again, I don't think condos are cheap. I think they're undervalued in comparison to the rest of the market when we look at certain metrics and we track this over time.
What's going on, YouTube? It's Rebecca Lynn Matheson, aka the Canadian Cottage Girl, and welcome to another episode on the Canadian Real Estate Channel. Make sure, guys, if you liked today's video, that you throw us some love in the comment section below. Also, smash the like button and subscribe if you haven't already. Emma, welcome to the channel.
Good to see you.
Good to see you too. So we're going to be doing a little market update on Toronto, and it's still going crazy, so I cannot wait to hear what the numbers are like now, Emma. So why don't you kick us off here? First of all, how you doing? What's new?
It's been a wild ride. It's been a wild start to the year. I think we had a pretty wild 2021, and we're looking like we're going to have another wild 2022. So I'm excited to share the data with you guys, and I know there's going to be some people who are maybe having a mini heart attack about the numbers, but the whole goal of the presentation today is to bring everybody back down to earth and then look at kind of the fundamentals and understand, like, how do we get past this? How do we win in today's market? And like, how do we actually have success?
Yeah, love that. Awesome. Cool. Well, let's jump into the numbers that everyone loves.
So let's talk about the year over year and month over month performance. So normally I just focus on the month over month stuff, but I want to just kind of recap the year over year, since the numbers that we're talking about today are going to be the January numbers. And so we'll start with the month over month stuff, December to January. Normally what we do see, and like if you go back and go to our old videos, I've kind of preached this for the last little while, but as soon as the turn of the new year happens, there's just like this, I guess, the people who didn't buy last year have a little bit of FOMO, and then there's a lot of positivity and optimism for new people to enter the market, the New Year's resolution buyers, right? And so as a result of that New Year turnover, you always see like the memes, New Year, new me kind of thing. We usually see some upward pressure in the market. And so normally we'll see somewhere between kind of like March, January to April, a 5 to 10% increase in prices. That's not uncommon to see. We've basically done that. We've sped everything up, and we've done that in January kind of across the board. So if we look, condos, I don't want to say like they've technically underperformed in comparison to the rest of the market, but they've still performed very well. So they've gone from 730 to 760 from December to January. So a price increase of about 4% in 1 month. Then we've got condo townhouses that have jumped from 882 to 952. So 8% essentially. And then we've got semis that have gone from 1.34 to 1.47. So we're just shy of 1.5 million for a semi. And then we've got detached, which made the biggest move. And then we went basically from 1.7 to almost 1.9.
That's wild.
So it's really important that we look at, we can look at these growth numbers, but what's really important to understand is kind of like average price points. What I think is very interesting, if we look at this graph here, Jan 2021 to Jan 2022, we've seen essentially 20% or north growth of every segment of the market.
Yeah.
We are basically, for semis, almost where we were starting last year for detached prices, which is interesting. So with condo, townhouses, semis, and detached, we're absolutely at the peak of the market. Condos are, beyond the peak of the market. Condos are at the peak of the market. We've seen condo prices hit 760 before previously one time, which was in October. And so I'm curious to see how things progress. My personal beliefs, I think that condo prices are poised for a pretty big run up this year. I'll explain why in a little bit. But one of the reasons being, this is the most important number that I'm going to look at right now, or that I believe, because if we pass that $1 million threshold, the down payment requirements are significantly higher. We obviously have to have 20% down. And so right now, a lot of people are being priced out of the freehold market with semis and detached. And so as a result of that, a lot of people are entering the condo townhouse market because it's the closest thing that you could otherwise get to being in a freehold house, right? So we're 4% away from condo townhouses cracking that $1 million mark, and then the down payment restrictions change. And 5 to 20% is a big gap, a big difference for down payment restrictions. And so I am going to be watching this very closely, because I honestly think as soon as this cracks that $1 million mark, we're going to see a lot more pressure on condo high rises, because they'll be the only segment of the market in the city of Toronto that people will be able to get in for under $1 million for average price point.
Right. And Emma, I just want to touch on that just to further elaborate there. So the down payment requirements over $1 million in purchase price, are you saying you need 20% down versus under $1 million? You can put that 5% down if it's your primary residence.
Exactly. Yeah. So just for clarity on the down payment requirements, if you are purchasing something at $500,000 or less, you can put down 5%. If you're purchasing something between $500,000 and $1 million, you will have to put 5% down for the first $500,000 and 10% for any portion that would be above that $500,000 mark. So if you're buying something for $600,000, you could put $25,000 down for the first 500, and then you'd need to put 10% of the $100,000 spread above that 500,000, which would be 10,000. So it'd be 35,000 for 600K. But as soon as you hit that $1 million price point, instantaneously your down payment requirement must be 20%. Right. Now there's some talk about potentially loosening those requirements, extending amortizations, all that kind of stuff. So I think we'll probably have some big mortgage news this year. I don't know when that's going to happen, but it's definitely something that I'll be kind of keeping my eye out for. But if things stay the same and we don't have any changes, it really is important to understand that we're getting very close to the point where condo high-rise, condo apartments are likely going to be the only thing. I would be more surprised if condo townhouses did not hit $1 million this year.
Right.
That would be surprising to me. So I think it's really important for people to understand, if you're someone who right now is looking for condo townhouses and you don't have 20% down, the urgency is really on that segment of the market right now. Like, you really need to be prepared, because if we're talking about 4%, we could be talking in today's market 1 month away from, or half a month away from being able to hit that $1 million mark.
And especially if people are aware that that is what's going on, then there's going to be even more of a rush. And that anytime that we see that demand with low inventory, those prices are changing. Now, this is also another important point here, just to kind of elaborate, would be, because of this impact, as you said, people are only going to be able to afford those high-rise condos, but it's also going to affect the markets outside of Toronto. So as soon as that goes up in the condo townhouses, we're going to see other markets, people buying and commuting and having a direct impact, because affordability changes substantially as soon as we hit that $1 million mark.
Yeah, it's really interesting to see that. I mean, I think these smaller suburb areas, like even, the Londons, the Hamiltons, um, they've seen a even greater run up than Toronto since
Yeah.
the beginning of the pandemic, just with the, everyone trying to work from home and all of that kind of stuff. So when I look at these numbers, like these numbers look crazy. I think, most people would look at this and say, oh, like, geez, almost $2 million for a detached house in Toronto. But context is everything, because if you actually look at like the average price point in, we'll say, Whitby, which is obviously in the GTA, but it's not right downtown. It's not in the city of Toronto. Average price point is like nearly 1.5 there. So there actually really isn't much of a disparity. These numbers look crazy and people go, this is like unsustainable, blah, blah, blah. But if you actually look at the greater scope of average price points for other cities, I'm not saying Toronto's cheap. Toronto's not cheap, but I do think that there are certain segments of the market that are undervalued.
Yeah. Yep, that's good way to put it, for sure.
So if we look at some other important metrics, I'm going to talk a lot about the condo market today, because I genuinely do believe that we're going to see a run up in condo prices just as a result of some things that I've been tracking. So months of inventory, everybody knows I'm like huge on this metric. We're really tight for inventory right now. We're at less than 1 month for both freehold and for condos. The most interesting part of this whole graph, though, is that for the first time in a long time, condo months of inventory is below freehold inventory. And this is a metric that is usually an indicator of, potential price increases to come, because this shows how quickly houses are selling off the market. So right now, what we know is if no other condos hit the market within 3 weeks, we would have no more inventory. Everything would be sold out. And within a month, we would have all the freehold properties sold out. Wow. So, for this to be more of a balanced market, we need to be somewhere between kind of like 4 and 6 months of inventory. So we're in an extreme seller's market right now. But for the bulk of the pandemic, and even, like we'll say 2020 and even 2021, freehold inventory was less than condos, and we've just saw that flip like at the beginning of January. So there's definitely some more pressure for condo prices, and I think this is one of the leading indicators to understand that we're probably going to see those pop up a little bit.
Yep.
Okay, and then sales trends. So it's, like I said, it's pretty common to see increases from December to January. 75% of the time over the last kind of 20 years, we've seen an increase. This year, 2017 was also, I would say, 2016, 2017 was also another big year for Toronto real estate. That was kind of like the year of the condo. We crushed that number. I mean, that was at 5.5. We're still pretty far ahead of that number at 7.3% for average price increases from December to January. And so that's where we're at with that. The one number that actually surprised me was the total sales numbers, because it felt like there was nothing for sale in January. Most of the offers that we were putting in with our clients in January were like 15 plus offers, like 15 offers or more. So it didn't feel like there was much inventory. But if I look from like 2015 to 2021, 2022, there actually were quite a few sales that happened. It didn't feel like there was that many, but we had a substantial amount more than 2018, 2019, 2020. Last year we had quite a bit of activity that happened at the beginning of the year. There were lots of trades happening, but I would have expected to see this. There was obviously less activity in January, but this was still a much bigger number than I expected to see this month.
Yeah, and do you think that's just because of the perception right now and the amount of demand that there is?
So yeah, and I also think that there were properties that we had, just to kind of give you an example, I had an estate sale that we listed at the end of November. We were having a really hard time getting rid of it. And as soon as the year turned over, all of that kind of like existing housing stock all sold immediately. So I think that was a big portion of it, is that there was some stuff that was kind of hanging around from like a 2021 timestamp. There wasn't a whole heck of a lot of new inventory that hit the market in January, but essentially like everything sold. And I'll kind of show you that here. So like new listings, this number here, the sales to new listings ratio is how many listings come up and are they actually selling? If we look over the last kind of like, 20-ish years, we're looking between like 45 and 50%. And so what this number means for any viewers is like, sometimes you have properties that list too high or they get relisted and they come to market and they come back to market and all that kind of stuff, right?
Yeah.
We're not really seeing that right now. The bulk of the inventory that's hitting the market is selling immediately. People aren't really relisting. Most homes are selling. So January was a great time if you had like a little bit of a tricky property, an estate sale that needs a lot of work like I did, a property that, maybe had 2 bedrooms instead of 3, no parking, like any sort of quirks with your property that may have been more difficult to sell. It doesn't matter right now because there are very few homes for sale. And so as a result of that, we obviously saw 2021 was crazy. We had 73%. So basically everything at the beginning of last year was selling as well, if anybody remembers how crazy the market was then. And 2017, which is also another massive banner year. These are the only 3 Januaries in the last 20 years that have hit these marks. And if you look at those years, they were all massive years for Toronto real estate. So it really is important. And it's not just Toronto. We're looking at Toronto and then the 905 as well.
Yep.
Basically everything that's hitting the market is selling for the most part.
Good time to list.
It's a great time if you're a seller. This is also super interesting because I feel like the market's maybe shifted up a little bit. So this is solds over asking. Normally we see this number as, somewhere we'll say recently between kind of like 40 and 60%. Both condos and freeholds are selling over asking substantially more than what they have in previous years. Like it's not even close. We're seeing what we would typically see in like an average kind of spring market happening in January, which is very unusual. And so one of the factors, they haven't sold enough properties. I'm going to talk about like open bids because I've gone through 2 recently. And I think people are very interested in it. So I want to talk about that. I think people are listing very low now. So I don't know if that's, I'm assuming that that's one of the factors that's coming into play with solds over asking is people are listing very low, but properties are selling for more money, like more money than I'm expecting them to. So I'm not surprised to see this number higher. I am surprised to see it that much higher though, to be honest.
Yeah. How do you even like guide somebody making an offer right now if things are going that high over? Like how do you even know what to offer?
Well, if we look at the numbers, like the good news now is that at least we have some data points for 2022. January is always very difficult because I love to go off data. I don't like to go off my gut.
Yeah.
So I try to track as much as I can, but as we know, most real estate data doesn't come out for, 30 days later. Right. And so I was tracking pretty regularly. Even I had been tracking these kind of open bids and I'm like, okay, look, it looks like most properties are selling somewhere between, 7 to 10% above the most recent sale. Even if the recent sale happened last week, that's what we were seeing for many properties that we were tracking. And so our talk points with clients has to be, this is likely what's going to happen. What you have to be aware of is there are no other comps to substantiate this. So you have to be very prepared for a potential appraisal issue. Now we have, I think, a decent amount of data points to be able to, to showcase to the bank what's happening this year.
Yeah.
You have some, especially for condos, you probably have a couple other sales that have happened to the building, that kind of thing. So now we have a little bit of a baseline to help any other future sales in 2022, but it really is challenging for January because you're going off of what has happened in previous years and just knowing the market, having gone through this so many times. I know in January the prices are going to be higher because you have the FOMO buyers, you have the new buyers, you just have more pressure built up. This year was challenging. Like most of our clients did not buy a property on their first offer. Right. There's certain time frames throughout the year when you get that, but right now, if you're a buyer in the market, you should be prepared to put in 3 to 6 offers, to be very honest
Yeah.
with you. It sucks, but you have to be very consistent and you have to be persistent. Your
Mhm.
agent isn't necessarily doing anything wrong. It's just
Yeah.
really, it's a difficult time right now, to be honest.
Yeah, absolutely. I think you made a good point there, though, about the bank. Like, even if you put in an offer that gets accepted way over asking, it still has to appraise in order to get the financing. So
Yeah.
I think that those are all important elements to consider in these markets.
Yeah, and that kind of goes back to our earlier point of down payments, is like, it's really important that you're having these conversations, or your agent's having the conversation with you, to make sure if there is a discrepancy,
Mm-hmm.
if you bought something for 600,000 and the bank says it's worth 575, then the bank's only giving you 575 because that's what they feel it's worth. But if you've committed to purchasing something for a higher dollar amount, it's your responsibility to cover any differentials that could occur. So you really need to make sure that, and there's no way to guarantee, because most of these offers are going in firm, but you really do need to make sure that you have a little bit of gunpowder outside of just your down payment in case there is any disparity. I have not seen any appraisal issues. I even had a conversation with a mortgage brokerage this morning. They haven't seen any, but
Nice.
that doesn't mean that the opportunity is not there. It 100% is there.
Totally.
Yeah. So, okay, one thing I think is really, really important that came out earlier this week was our immigration targets, because they've now been increased. And so last week, our immigration target for 2022 was 401,000. Sorry, this is for 2021, 2022, and then 2023. We've now upped that by 0.5% to 0.75% as of this week, as part of our economic recovery plan. So we're planning on having 431,000 newcomers to Canada. The most important thing for me with the numbers that were released is this: permanent residence, because this affects real estate drastically. If you're a permanent resident, you do not pay a foreign buyer's tax.
Got it.
So if we know that the target is 431,000 permanent residents, that increases the likelihood of purchases substantially, because the non-resident speculation tax is an additional 15% on top of your closing costs and all that kind of stuff. So it's a substantial amount of money that would likely deter a lot of people. It does deter a lot of people. But if you're a permanent resident, you're not subject to that tax. So that was really, really interesting to me. I've also highlighted underneath here, because you go, okay, well, there's 431,000 newcomers to Canada. How many of those people are coming to Ontario, and specifically for this video, Toronto? Because that is really what I want to know. Absolutely. So the share of immigrants to Canada settling in Ontario has been increasing over the past couple of years. It was 36.8, and now it's at 45%.
Wow.
So 45% of these people are coming to Ontario.
Yeah.
And about 35% of these people, if you look here, are coming to Toronto specifically, or the GTA.
Yep.
Okay. Another really important thing is, when you look at this number, you're like, okay, that's great. How many are families? How many would be refugees? All of that kind of stuff. But they've specifically said that our focus is on attracting skilled workers who contribute to our economy. And so I found this graph here that shows, well, of the 431,000 people that are coming to Canada, 241,000 a year, about 250,000 people a year, are coming here as skilled workers or skilled laborers, which means that they're likely to have decent paying jobs. You can actually go on the Canadian government website and it shows you what buckets we're looking to fill: doctors, architects, managers, IT, all of this kind of stuff, which will likely contribute to some decent paying jobs. And so if we take that into consideration and then we pair that with permanent residents, we have to understand, what does our longer term outlook look like for Toronto? Because right now we look and we're like, oh man, the numbers are crazy, it's ridiculous, blah, blah, blah. And I would agree with you. It's unsustainable to have 12% month over month. Yeah. But if we're looking at real estate, and my gut always tells me this is a long-term plan, we have to understand, how are we looking long-term? Because right now it's very easy to beat yourself up and say, this is too tough, I'm going to wait for a better opportunity, blah, blah, blah. But what is this going to look like 4, 5, 6, 7 years down the line? So we need to look at these numbers, because I think it's going to at least, instill some positivity around continued growth for the Toronto market.
Totally.
And so if we look at this, I received an email from Oria this week basically saying that, you know, they've got a proposal to build 1.5 million homes over the next 10 years.
Wow.
So this is a really positive email to get, but we have to look at the numbers. And so if we do some back of the napkin math, we look at this, we go, okay, well, assuming that these 1.5 million homes are built over 10 years and it's linear, so like, let's say 150,000 homes per year.
Yep.
Well, if we look at just our immigration plan, not the existing housing problems that we already have. Well, if we're building, you know, 1.5 million homes in Ontario, but we're bringing in 431,000 people, that means that we would need 193,000 homes. Now, that's assuming that every single person is individual, not living together, blah, blah, blah.
Yep.
But if we look at the skilled laborers coming to Ontario, then we need 108,000 homes for people who potentially could actually afford to purchase homes. Now, all of these people are not going to purchase homes. Some of them are not going to be able to purchase homes, all that kind of stuff. But it's really important to understand that, like, it looks really good on paper and it is a good plan and it helps us to get there. But I don't necessarily think it's going to solve the problem because we're already so far behind where we need to be.
Yeah.
And so it's just really important to look at the finer details to understand what could potentially happen in the future.
Yeah, I think this is really contextually important, especially, like, as you said, no one has a crystal ball, and it can be so easy to get caught up in these numbers and anchor yourself to numbers that you've seen previously, like 5 years ago, 10 years ago, 2 years ago, and think that these numbers are insane. But if you had the same thoughts 2 years ago, like, and you didn't buy, you're probably kicking yourself now because the numbers have appreciated so much. So
Yeah.
I think no one has a crystal ball, but these sorts of stats about immigration and contextual details about what's going on in the economy can actually help us make at least an educated guess or try to make a better decision about whether or not it's time to still buy.
Totally. And I think, you know, like, human beings are human beings. Oftentimes we make decisions on emotion, and right now is a very emotional time for real estate. It's super frustrating. It's frustrating for us. I think people get this understanding like, oh, agents really want the market to continue to go up and they want multiple offers and stuff like that. But I have to say firsthand, it sucks. I would rather be the only offer at the table if I'm representing a buyer. And when I'm representing a seller, of course I want to get multiple offers for them. But if 50 offers come in, it's a lot of work to organize 50 offers in a spreadsheet and figure and call everybody back and do all this kind of stuff. So it's not always, I think that that's a perception that is not necessarily true of agents. It's like, it's really hard. I'm not going to say like, ooh, whoa, agents, like, we've made this choice to be in this industry, but people make emotional decisions. Right now is a very emotional time in the real estate market. We need to have some data and some context around what could potentially happen in the future to, like, lower those emotions down and say, okay, what do I think the long-term outlook is going to be? Am I willing to, like, go through this rocky kind of road right now to enter the market because I think that it'll benefit me in the long term, or I may have a more challenging time in the future being able to get into the market. Right now, I don't necessarily see, like, the light at the end of the tunnel, but I do think that there are going to be opportunities throughout the year where, if you are prepared, you can take advantage of the market. For instance, when if mortgage rates increase or mortgage rules change, what I've seen in the past in my career is, like, it shakes up the market temporarily. I don't necessarily think it's going to have a massive impact if rates go up by 0.25% or whatever. I don't necessarily think it's going to have a massive impact on the overall pricing or overall market, but I do think that there will be a blip in the market where everyone's like, oh, we should just wait it out. Like, let's see what happens here, because are things going to happen? That might be your time to strike while everybody else kind of freezes for 2 or 3 weeks to see what's going to happen, and then business continues as usual. Like, that's typically what I see when there are announcements. So I think those are the areas of opportunity for people this year.
Yeah, I love that. That's a great tip.
Yeah. So let's talk about the condo market. we track this every month. And what's really, really, really interesting to me is like I've been preaching about Toronto East for months and months and months and saying that I thought it was undervalued because for the longest time, this was in the mid 500s. You can see like even in December, it was at 579, right? So there was a pretty big disparity between Toronto Central, Toronto East, and Toronto West.
Mm-hmm.
What's interesting to me is this month, the East basically closed the gap. I mean, there's only like 30K difference between the East and the West, when normally there's a big disparity between these two.
So crazy.
Right? So if we think about prices, it's usually like Toronto Central, which would be downtown, would be the highest, and then we've got the West, and then we've got the East. But now we've got like Toronto Central, and then we've got these two, which are like relatively close in terms of prices. So I was tracking Toronto East for the last little while because I felt it was very undervalued in comparison to the rest of condos in Toronto. But now my shift is actually focused to the West. Because normally there's a pretty big gap between these two. And if this gap is closed, I'm curious to see what happens with these numbers.
Right.
So just something for people to look out at over the next, couple of months. And then if we look at kind of like are condo prices poised for an increase? Again, I don't think condos are cheap. I think they're undervalued in comparison to the rest of the market when we look at certain metrics and we track this over time. So over the last 10 years, the price differential for condos and for detached houses in Toronto, it's almost always twice as expensive to buy a detached house as it is a condo. That's just over the last 10 years, it pretty much toes that line, as you can see here.
Yep.
There are two times, 2017, which is when we saw the prices for condos skyrocket. And right now we're trailing just behind that, where that disparity is quite significant. Like detached houses are 2.33 times what the cost of a condo is right now, when normally we see it be twice as much. So in order for us to kind of come back towards this mean, that means freehold prices come down or condos typically go up. If we actually follow the average, the condo prices in the GTA should be $875 right now. And what we know is they're about $760. So I think if we look at all of the data points that we looked at today, and we say, okay, long-term immigration, condo months of inventory, the average price point of a Toronto detached home in comparison to other areas in the GTA like Whitby, and we go, okay, it's expensive, but it's actually not that expensive in comparison to like looking contextually across kind of Ontario. Do we think that prices are going to come down for detached houses, or do we think that prices for condos are going to increase to kind of close this gap and regress a little bit more towards this like average ratio? So up for the, any viewer to kind of determine what they think. I think going through this exercise every month has led me to believe that condos are not cheap, but they are undervalued in comparison to the rest of the market. And that I suspect that we'll see a little bit of a run up. Like I've seen some condos in Mississauga sell for more than what they've sold downtown, which is absolutely bananas to me. So it's just really interesting to see this, but the condo prices are something that I'm absolutely going to be watching very closely over the next couple months.
Absolutely. Yeah, guys, why don't you chime in the comment section below and let us know what you think is going to happen here. Again, nobody has a crystal ball, but I think it'd be fun to hear from you guys and hear what you think is going to happen based off of all of these stats that Emma's presenting. Because all we can do is interpret the data based off of our perspective and information that we have at hand. So I would love to hear from you guys as to what you think is going to happen in the coming months or year.
Totally. And then just to kind of cap things off, it's like, how do we win in the spring market as we kind of look ahead for anybody that is actively looking for real estate in 2022? How do you actually like win? Because it's challenging right now, and I'm not going to like sugarcoat it. It's difficult out here, especially for buyers.
Yeah.
But oftentimes sellers are also buyers, right? Like most people who are selling, unless you're downsizing or exiting the market, are also buyers to a certain extent. So selling a home is very easy right now. Right? Selling a home is super, super easy, but buying a home is much more challenging. And so we have a lot of people that want to upsize from their condos right now, but they're like, where am I going to go? So I can't put my condo on the market because I don't have enough inventory and I don't know where I'm going to go. So it's really important to kind of look ahead a couple of steps and say, okay, like how do I actually do this? And so pre-approvals, you need to get a pre-approval done. Absolutely, without question. And the good thing with pre-approvals is typically if you lock in a pre-approval today, they'll give you a rate hold for 90 to 120 days. So if rates do go up, you'll be honored with the lower rate. So get that locked in because there's tons of proposals that rates are going to increase. So you might as well get that out of the way. Opportunities, like I said, will present themselves, but I do think that they are going to be temporary opportunities. So being prepared is super important. I don't think that you should like wait to try and time the market, but to think that what we saw in January is going to continue 100% throughout the course of the year. I don't think it's sustainable. I think there are going to be areas of opportunity for like announcements to be made and stuff like that to kind of like shake the market up a little bit. And those might be good opportunities to strike. And then again, persistency and consistency. Understand that like your agent isn't necessarily doing anything wrong if you didn't get an offer on the first time. You probably are going to need to submit a couple of offers, and you can't get too emotionally invested in any property in today's market. You need to find something that's going to work for you and fits in your price point, and that's probably the right one at this point. And then, the last thing is like education and realism really is the key to today's market. You have to be realistic about the price or the fact that the price that you're going to pay for a property is likely going to be slightly more than what the guy paid last week or 2 weeks ago, because that's how like the market continues to go up. The market wouldn't be going up if people weren't doing that. So I think it's common for anybody submitting offers to say, well, I want to just pay the same price that the guy paid last week.
Yeah.
And it's like, if people were doing that, then we would have a flat market. So it's really important to understand that like you have to be realistic in that you're likely to pay in an upward moving market slightly more than what the last guy paid. And it's okay. It's just don't make that gap too wide.
Right. Absolutely. Now, in terms of practical elements on an offer, like you mentioned, it's firm. Like, what are the terms that are actually being accepted here? Like, how much of a deposit are people having to put down? Like, what conditions are being accepted? Like, is it only firm offers? How quick do you need to be? Like, what are the elements that actually get it over the line?
Yeah. So right now, having anything with conditions is very unlikely. That doesn't mean that you can't try, but it means that the probability of your offer getting accepted would be typically much lower, right? And so the way that I like to kind of pose this to my clients, because I've been on both sides of the transaction so many times. I've listed so many properties. I've also bought so many properties with clients.
Yeah.
When I'm representing a seller, yes, price is typically key, but in the hierarchy of like the 5 kind of elements that you need to consider with an offer: price, closing date, deposit, irrevocable, which is how long your offer is valid for, and then conditions. Those are kind of like the 5 main components of an offer. If I think about the hierarchy of what is important to most sellers, price is important and conditions is second, but like a very close first, right? Because for them, they need to make sure that if I'm selling a property, like I mentioned before, I need to go and buy something else. I need to make sure that you're going to be able to close on this property, right? Yeah. And so it's very unlikely in today's market to have someone accept a conditional offer unless you are substantially overpaying in comparison to the next bidder, right?
Got it.
And so that's one thing that I like to express to my clients is, you can do whatever you want. You can submit conditions. We're happy. We work for you. We will do what you want to do. But if your offer gets accepted in today's market with conditions, it's likely because you're going to have to overpay in comparison to the next guy if there's going to be multiple offers. So it's just something that's really important to take into consideration. Do you value going in firm, or do you value going in firm with potentially a bit of a lower price, or do you value going in a little bit ahead of everybody else to give you the comfort of having conditions?
Got it.
Right.
And then the deposit element, like, is that really a toggle switch that matters that much? Maybe if you have conditions on there, you put a higher one, or what's the dynamic there with deposits?
I think so. The standard deposit in Toronto is 5%. It's more of a perception for sellers, like a comfort thing for sellers, if you have more of a deposit. 5% of the average purchase price in Toronto is still a very substantial amount of money. So it's very unlikely that anyone's going to walk away from 5 or 7% or whatever. It's more of a perceived thing that your offer has more weight if you have a higher deposit, but going in with less than 5% would be it would be very unlikely to see that on an offer submission. So you should always expect that 5% will be kind of like your standard to submit. But going back to our earlier point about the open bids, because I know people are super interested in this. There's a company called Unreserved, which purchased a ton of, I want to say like maybe 12 or so condos in the fall market. So between kind of like September and November. And they're now releasing them on their platform to prove concept, which is essentially like an eBay style auction for properties, which is really interesting. So one of the proposals from the Liberal government during the most recent election was to potentially remove blind bidding and do open bidding, right? And because we've never had that before, Australia does it, but because we've never had that before and the market's been so crazy, people were like, oh, open bidding. I think if you could see what everybody else was openly bidding, prices would likely come down, because with blind bidding, you don't know what everybody else is offering. So again, to our point that we just discussed, if you have conditions, might be paying $50,000 more than the next closest guy, but you would never know because it's blind bidding.
Of course.
With this company Unreserved, they basically have built out a platform that does open bids, which is really cool actually to be honest. I was super excited to actually go through the process. But you can see everybody else's bid. Now, one thing that I personally found from like a psychological perspective is when you bid, it only increases by 2,500 every time. So like if you bid 500,000, I'd be in at 500,000, 250 or whatever, right? And we'd continue to go up. So you go, okay, well, that really gives me comfort as a buyer because I know I'm not really overpaying. Like if I'm spending $1 million and I spend, $2,500 more than you, like I don't really feel like I'm overpaying. It's not 50K, it's 2,500. But I think people then get caught in this trap of it's only 25K more than what or only 2,500 more than what the next guy's willing to pay. And so I think people get emotionally invested in that because they know they're not necessarily overpaying and other people are willing to pay. So when I submitted the offer earlier in January, the price actually went for what I think would have been, I think it went for slightly higher than what it would have gone for in a blind bid. Obviously, I don't know because we didn't submit in a blind bid. Right. But given what I thought the price of the property should be in comparison to where it ended up on an open bid, I actually think it sold for slightly higher because it was just like, it's very easy for people to get caught in that trap. Like if you buy anything online or eBay, you're like, I'd pay an extra $1, I'd pay an extra $2, whatever. Right? It's not that bad because you can see that somebody else was willing to pay that too. And I think that emotional investment is just kind of part of the process regardless of how the marketing strategy is. So it was super interesting to go through that, but it's also like if anybody's watching this video and wants to go and watch the bids, like just go to their website. You can literally log on and watch it live. So it's cool. It's a super interesting thing to go through. I just think my experience going through it, it didn't change the price outcome. I think the fundamentals of the market are still the fundamentals of the market. Like we don't have enough supply for the demand, and as a result, prices are going up.
Right. Yeah. It didn't actually solve the problem that it was trying to, but I think there is a cool element there though. Like when you sit in an auction house and people are like raising their paddles, like it's only like $2,500 more. So you could see like Jim, Bob, and Paul all be like, no, I want the house. No, I want the house. No, I want the house.
And that's exactly it. Right. I think, it becomes pretty difficult to walk away when you have three people kind of chomping at the bit for $2,500. It does. You do get emotionally invested, but the very nice thing about their platform that I found is if my client comes to me and says, hey, I am only willing to put in an offer at $750, I know that's my max. You put it in, you walk away, and it sends you an email, you've been outbid or you got the property, right? So you don't have to sit there and wait for phone calls and wait for your agent to call you back and blah, blah, blah. It's like I put in my offer And if I know truly that that is my max, it's in there, and it just is what it is. Like, I actually think the format of going through the offer presentation and process
Yeah.
is much better. Like, is great. It was a great experience for myself and for my clients.
Yeah.
I just don't think that I don't think it changes anything in terms of like what properties are going to necessarily sell for.
Right. I guess the same sort of technology could be used just for the blind bidding as well, though. Like it's just that right now we have it kind of on a PDF version where you submit your offer and you call the agent. Like that technology could, in theory, still be used for blind or open bidding. It's just the fact that it's being launched through the open bidding platform.
Yeah, the only thing that I would say that was different having gone through the process is with the open bids, the only variable is price.
Right.
So when you do traditional offers or blind bids, again, we said there's 5 elements: price, closing, conditions, deposit, irrevocable. You don't really get any of those other things. So on their platform, there is no option to put in conditions. They have their own agreement of purchase and sale. You're just putting in the price, and they're dictating essentially the rest of the terms. You can't negotiate on any of the other terms. It's just like eBay, right? You want to buy a Beanie Baby on eBay, you're not asking for a different closing date. They're just going to right? So that's the one thing that is one of the, I guess, drawbacks that I would say is that there's a lot of things that are dictated for you as a buyer. And again, they haven't proven the concept. I think they've only sold like in Toronto 4 or 5 properties. They have a bunch that they've sold in Ottawa. So I'm sure those kinks will probably be like ironed out a little bit moving forward as they continue to get feedback. And I have to admit, the customer service was great. Like, I really do think that they have a great kind of customer service approach. It was a very positive experience. It's just, I don't think that it's as fleshed out as it could be. But that was one of the things, is like, if you wanted to include conditions, that's not an option. That's not an option. And so as a result of that, that is going to eliminate some of the buyers. So my thought process when we went into this was, I should try and take advantage of this opportunity for my clients, because I know there's going to be a bunch of agents that are going to say, this is too new. I'm not going to advise my clients to kind of go through something like this. And I thought, well, in today's market, when it's extremely competitive, when we're expecting 15, 20 offers, maybe this is my opportunity to get my clients into something that has a significantly fewer number of offers, because nobody else is comfortable going through this process. So like, I should figure this out.
Totally.
The challenge is that the people who are willing to go through, so on this platform, you do have to submit a pre-approval letter. You have to have your pre-approval done. You cannot submit an offer on the platform if you haven't gone through the process. So that's why I'm super bullish on people being prepared. But as a result, it's really good because they've done their due diligence and they've streamlined it so that you're only competing with actual competitors. There's no fluff. There's not 20 offers and 10 of them are at asking when it's like significantly below. It's like, here are your 6 very strong, serious competitors. So I think there's definitely pros and cons to both. It was a really interesting exercise to go through. I think at the end of the day, the fundamentals of the market are the fundamentals of the market. Like, and that's the reason why prices are going up. But overall, like, a pretty good experience. Like, there were definitely some pros to it in comparison to like just traditional offers that we typically do with blind bidding and like on the phone and stuff like that. I just felt like there was more transparency. I just don't think the outcome was any different than kind of what I expected. And I did think that there was less for me to be able to negotiate on behalf of my clients. Like, a lot of it was just, it's only price. I can't really like negotiate their closing for them or conditions for them or anything else. Everything else was kind of dictated for you.
Yeah, I think those are all important elements to consider in a purchase of a sale as well, or a purchase of a home rather, is the closing date, is all of the terms and conditions that it come with. So I think that there will be a lot of these like alternative options that pop up like this platform over the next while to try and solve these problems that may ultimately just be like inventory. But I think it will allow for us to maybe have some alternate options on ways to bid or sell or buy homes.
Yeah, I mean, honestly, again, like, I think pros and cons to both.
Yeah.
I'm super happy that I was able to actually go through that and get the experience of doing it, because now I have the confidence to at least be able to advise my clients on which clients this type of offer process actually works for. There's certain people where it actually works amazing for them, and there's certain people where it would never work for them because they have very specifics for their closing, and they don't want to wait 2 days. The bid's open for 2 full business days. And so it's like, are you going to wait until Thursday afternoon if another property pops up right now? Or are you someone who's like, I can't wait around for 2 days with my offer open kind of thing. So, again, pros and cons. For certain people, it's amazing. For certain people, it would never work, but it's nice to be able to have a second type of option to go through.
Absolutely. Well, Emma, thank you so much again for being on the Canadian Real Estate Channel. It's always a pleasure chatting with you, hearing the stats and having some potential predictions here and what's going on with the economy and the market. So always a pleasure. Now, Emma, where's the best place for people to find you?
Instagram is absolutely the best place. So it's Pace of Base on Instagram. And yeah, if you send me a message there, I will get back to you. It might take me a little while, but I get back to everyone. So yeah, I look forward to connecting with you guys there.
Love that. Awesome, guys. Well, thanks again for tuning in to another episode on the Canadian Real Estate Channel. Again, if you aren't already, make sure that you subscribe just down below and click the notification bell in order to get all of our latest videos sent right to you. And as always, make sure you smash the like button and throw some love down in the comment section below. And we always love hearing from you guys and actively participating in the Canadian real estate community here that we have going on. So thanks for tuning in, and we'll see you on the next one. Peace.